What's good, crypto fam? Welcome back to the channel. Buckle up because Bitcoin is making major waves right now. Over the past 3 days, US spot Bitcoin ETFs have pulled in a jaw-dropping $800 million in net inflows, pushing their total to a record-breaking $49.86 billion. BlackRock's IBIT is leading the pack, and corporate giants like MicroStrategy are gobbling up BTC faster than miners can produce it. Is this the start of a new bull market? Let's dive into the numbers, unpack the analysis, and figure out what's next for Bitcoin. Smash that like button, subscribe, and hit the bell for more crypto fire. Let's go. Alright, let's break this down. US spot Bitcoin ETFs are on an absolute tear. Over the last 3 trading days, they've raked in over $800 million. In net inflows, that's about $200 million a day, or roughly 1,980 BTC daily, based on SOSO value data. This has pushed the cumulative net inflows for these ETFs to a massive $49.86 billion since their launch in January 2024. That's not pocket change. Folks, these ETFs now hold Bitcoin worth over $135.71 billion. This is the biggest allocation to BTC through regulated investment vehicles ever. So, who's driving this frenzy? Let's find out. Leading the charge is BlackRock, the world's largest asset manager. Their iShares Bitcoin Trust, or IBIT, is an absolute beast. It's pulled in over $52 billion in cumulative net inflows since launch, including $164.6 million of the recent 3-day $216 million surge. That's right, IBIT alone accounts for over 55% of all Bitcoin held by US spot ETFs, holding a staggering 700,307 BTC, according to Apollo co-founder Thomas Ferrer and BitBo data. But BlackRock's not alone. Fidelity's FBTC chipped in with $66.05 million in inflows, and even Grayscale's GBTC, despite its higher fees, added $6.2 million over the same period. Here's the wild part. IBIT's total return since launch is an incredible 82.67%. And, get this, BlackRock's now making more revenue from IBIT than their flagship iShares Core S&P 500 ETF. That's how big this is. Institutional money is pouring in, and it's no wonder traders on XR buzzing about IBIT's dominance. Now, it's not just ETFs going crazy. Corporations are jumping on the Bitcoin train. According to Bitcoin treasuries, publicly traded companies snapped up 65,000 BTC in June alone. That's over $7 billion worth. Leading the pack is MicroStrategy, the OG of corporate Bitcoin hodling. But others like Japan's Metaplanet and Semler Scientific are joining the party. Galaxy Research dropped a bombshell. In 2025, US Bitcoin ETFs and MicroStrategy have bought $28.22 billion worth of Bitcoin, while miners only produced $7.85 billion in new BTC. That means institutional and corporate demand is outpacing new supply. This is huge for Bitcoin's scarcity narrative. Only 21 million BTC will ever exist, and these big players are eating it up. Let's hit the charts for some technical analysis. Bitcoin's been flirting with $100,000. Recently trading around $98,000. After a 15% dip from its all-time high of $112,000, these ETF inflows are providing Waters structural support for BTC's price, with analysts like Ryan Lee from BitGet Research noting it's helping Bitcoin recover. The $800 million 3-day inflow spree, averaging 1,980 BTC daily, signals strong institutional buying, especially via over-the-counter channels to avoid spiking spot prices. The Relative Strength Index, RSI, is likely hovering near overbought levels. After this rally, X posts suggest sentiment is overwhelmingly bullish, with traders eyeing a breakout above $100,000 soon. Key levels to watch: support at $94,000, recent recovery point, and resistance at $112,000 all-time high. If inflows and corporate buying keep up, $120,000 could be in play, especially with miners holding and not selling, per CryptoQuant data. But here's a curveball. Short-term holders have been selling off, with on-chain data showing a drop in Bitcoin held for less than 155 days. This could mean retail is cashing out, leaving institutions to drive the price. Let's keep it real, Bitcoin's not without risks. The recent $800 million ETF inflows are bullish, but a market correction could hit if sentiment shifts. President Trump's trade deadline postponement to July 9th introduces uncertainty. Tariffs could spook markets, including crypto, as noted by BRN analyst Valentine Fournier. Plus, IBIT saw a record $418.1 million outflow day in February, showing volatility, even in top funds. Privacy coins like PIVX are also gaining traction, which could divert some altcoin capital. Still, Bitcoin's fixed 21 meters supply and institutional adoption make it a unique beast. So, what's next for Bitcoin? The numbers are screaming bull market, with $49.86 billion in cumulative ETF inflows and corporates outpacing miners. Bitcoin's scarcity is front and center. Analysts are hyped some CBTC hitting $180,000 in 2025, fueled by potential nation-state adoption and pro-crypto policies under Trump. Long-term, Bloomberg's Eric Balhunas says financial advisors' 20% share in Bitcoin ETFs, about $21 billion, could double next year as more institutions jump in. Short-term, watch for a $100,000 breakout if buy-side volume stays strong, per Rect Capital's analysis. But if tariff fears or profit-taking hit, we could see a pullback to $90,000. Either way, with BlackRock's IBIT holding 700,307 BTC and corporates like MicroStrategy in a feeding frenzy, Bitcoin's fundamentals look rock solid. Alright, crypto fam, that's the scoop on Bitcoin ETFs going wild with $800 million in inflows over 3 days. BlackRock's IBIT is dominating, corporates are stacking BTC, and the bull market vibes are strong. Are you riding this wave or waiting for a dip? Drop your thoughts in the comments. If this video got you pumped, smash that like button, subscribe, and hit the bell for more crypto breakdowns. Check out CoinMarketCap or Soso Value for live ETF data, and always DYOR before investing. Stay sharp, stay hodling, and I'll see you in the next one. Let's keep stacking those AS. Peace out.